Good afternoon. My name is Michael Pinkus. I'm the CFO of Bitbond. I'm actually from Texas. A previous speaker was from New Mexico, and actually one of the first speakers was from Nebraska. So you're getting a full assault from Western United States today. Anyway, so what are we doing at Bitbond? Let me first tell you a few words about myself. I've been in banking and finance for about 20 years. Mainly in Europe, and I've seen a lot of companies. I've done a lot of different types of transactions, particularly in the credit space. And I recently joined Bitbond after knowing the founder for several years because I find it to be one of the most exciting and innovative companies that I've seen in years. So what are we doing? It's a quick overview. Basically, we are an SME lending platform. We're global in scale. We allow for origination of loans between borrowers and lenders in different countries, not just in one. Most of our peers are focused on lending in one jurisdiction, maybe two. From the very beginning, the inception, the idea of the founder was to have a truly global marketplace. So a bit of history about Bitbond. We actually were established in 2013. Up until the end of 2016 was essentially a proof of concept. Of course, we had our first venture capital investors, but once we became regulated by the German regulator BaFin as a financial institution, then things started to go all in the right way for us. But up until then, it was essentially a proof of concept. Could we actually have a lending platform that would allow for lending globally? After receiving our BaFin license, then we added additional institutional investors, and then went about improving our cash flow and credit model, which is, of course, our main product. When you look at a lending business, you basically need three things to be successful, right? So you need a diversified source of origination, you need a great credit team and credit model, and thirdly, you need funding. So these last 3 points on the time chart here, the timeline, first one talks about how we were improving and constantly improving our credit model. We've been adding machine learning components to it. We work very closely with University of Potsdam. Categorization in 8 different major languages globally. But it's a constant battle. It's constant back testing and trying to improve the ability of being able to determine the creditworthiness of a borrower. Secondly, we rolled out local partnerships to support our origination. On the early years, we were very much open to adverse selection, which means you go into a market, you don't have anyone on the ground that's supporting you and feeding you good borrowers and good leads. What happens? You get the rest. You get the borrowers that no one else wants to lend to. So starting out with a different type of credit model that wasn't cash flow based, without having local origination partners on the ground, we were open to higher default rates. Since then, they've come down to a fraction of what they were initially at launch. And thirdly, of course, funding. And I'll talk more about what that means. Just as a bit of history for you, those of you who have not been following the marketplace lending sector. So essentially, it started out like peer-to-peer lending, or what some people call crowd lending. You had groups of individuals collecting their funds together, and after a few days or a few weeks, a loan would be issued to a borrower, to an SME borrower. Well, the problem there is, of course, the borrower is having to be very patient, waiting, doesn't know if he or she is going to get the funds they need. So you started to see, and it's an interesting asset class. It's an asset class that it's too expensive for banks to originate because smaller businesses, by the time a bank starts to analyze the credit of a small business, they're already losing money. They need a certain minimum size loan in order to be to run a profitable lending business. So banks and other institutions said, wait a second, this is an interesting asset class. We're going to start providing funds. And the more funds that were provided by institutional investors, the less that were coming in from the crowd. So the idea of marketplace lending, where you had individuals gathering their money, was becoming less and less frequent. If you look at the largest platforms in the US, for example, On Deck, Lending Club, over 80% is coming from institutional funds now. With an STO, it gives us the opportunity to diversify our funding and bring individuals back into the marketplace and marketplace lending. I'm going to talk more about that in a second. So what have we done so far? So this is Bitbond to date. We've been around for 6 years. We've lent in 80 different markets, originated 3,300 loans, scored almost 30,000 loan applications, have lent to date 13 million euros. Most of that was starting after we received our BaFin license. But what makes us different? So you probably have heard about some of our peers that do SME lending. Like I said, one of the things is most of our peers are operating in 1 or 2, maybe 3 jurisdictions. And our goal from the very beginning was to operate in multiple jurisdictions to allow true cross-border lending. And the third point here, one of the reasons we're able to do that is because we're using blockchain for all of our payments. The borrowers and the lenders don't really notice that we're using blockchain. Just the fact that the funds are getting there much quicker than if we were using a SWIFT system instead of that, and also costing a fraction. So if you're going global and you want to transfer funds outside of the European Union, for example, then how do you do that? Up until now, it was always using typically the SWIFT system, the interbank transfer system, which can take up to 5 days, can cost up to 5% of the transaction. It's expensive, and it takes a long time. By using blockchain, it allows us to basically make our credit decision, which we can do it within 30 minutes, and transfer the funds, so the funds actually end up in the bank account of the borrower within 24 hours, and at a fraction of the cost. We're talking about, to transfer 50,000 euros, we're talking about 1 or 2 cents. The third point here, machine learning powered credit scoring. I've spoken a bit about that. Basically, we have been building in-house a typical cash flow based credit model that you would see in a bank. The big difference is we can do a credit analysis in 30 minutes. When I was at a bank, we were typically taking 30 days. Also, what sets us apart from our peers is we're the only fintech that's regulated by the German regulator, BaFin. And finally, we're the first lending platform in Germany, at least, that's started to finance SMEs via a security token offering. Here's a bit of information about our management team. Our founder, Radko Albrecht, is ex-Roland Berger at Deutsche Bank. We have the amazing benefit of having a great in-house CTO and tech team. A lot of people choose to outsource their tech, but we're very lucky in the fact that we have it all in-house. Me, I've spoken about already. Our head of credit, it was very important to hire an experienced head of credit to come in and help us revamp our credit model, which we did in 2017. And then, of course, having key people on the origination and legal side as well. So these slides are basically talking about our addressable market. Just a quick note. So how are we doing the credit scoring? Well, what we're doing is basically we're essentially not looking at the financial statements of small businesses, because many small businesses, let's face it, they're not run in the way of maybe a large business would be done with the same type of discipline. And so where do you gather the data? If you assume that you can't use the financial statements or they don't even exist in proper format. So we actually use a series of APIs, which are essentially portals, where we access data from the different bank accounts, personal and business bank accounts, with the consent of the borrower. It's part of the application process. It's all automated. When they go online, they do the application process. We ask for consent to access their bank details via API. They put in the necessary information, and we take a snapshot of that information. The portal closes. That information then flows into our credit model, resulting in what looks like a cash flow or a predictable cash flow, and the KPIs and metrics you need in order to score a client. And if I'm being too heavy on the credit side here, I have to apologize. I'm very excited about it because it's really something unique in the market. But I'm happy to dive deeper into that later after the in the next break. Why is this so important? Because our addressable market, although there's many more SMEs globally, these are typical the number of SMEs where we believe we can collect bank data on. And if they're e-commerce sellers, we can also collect the data from their Amazon, from their eBay accounts as well. These are some of the partners we work with on the origination side. This has been our growth, mainly over the last 2 years. So, what problems are we trying to solve? So, one of the reasons why we're here is having borrowers, small business owners, getting access to capital. I think that's one of the themes here, actually, if you look at the USAID banner. And then, of course, waiting time. If you have to wait 3 weeks, you're a small business owner, you're an Amazon seller or reseller, time is money. You need to have the money already yesterday so you can buy additional stock, turn that over, and be more profitable. For investors, what problems are we solving? Well, firstly, we all know we're in a low interest rate environment. Investors are tired of getting 10 or 15 basis points on the funds that are sitting in their bank account. Secondly, investors want to get access to these types of assets, but it's difficult unless you're a financial institution or unless you're willing to make a longer-term investment to gain access to loans. And thirdly, it's transferability. If you have this asset and you decide after a few months you'd like to change your portfolio strategy and you want to sell it, a traditional loan you basically have to keep until maturity because there's no liquidity. So what's the solution? A token. An STO, actually. What are we doing here? We're tokenizing alternative debt. Thank you, Daniel, because you already explained what a security token is, so that helps me be able to talk more about what we're doing with that. So what are we doing? For the benefit of borrowers and investors, we're essentially creating a transferable security under a prospectus that's been approved by the German regulator to allow for purchase and transferability within the European Union. This is a short video I'd like to show you now, which hopefully brings everything together, and then I'll just have 1 or 2 comments afterwards.
Germany-based Bitbond is disrupting the credit industry with its fully regulated global lending platform. And you can be part of it by investing in the Bitbond token. The Bitbond token is a security token with a prospectus that is approved by the German regulator BaFin. Investors participate in the profits of growing online businesses and the success of Bitbond at the same time. As a token holder, you will receive 4% interest per year, plus 60% of the profits of our investments, all while you support the financial inclusion of entrepreneurs. Over 120 million small and medium-sized enterprises around the world increasingly sell their goods and services online. However, they face one big growth obstacle: insufficient access to credit. That's because banks simply haven't built the technology to serve these businesses. Bitbond leverages blockchain technology to provide business financing worldwide. By replacing the inefficient SWIFT system with blockchain-powered payments, Bitbond reaches every business owner globally, from a freelancer in the UK, to an online seller in Kenya, to a restaurant in Singapore. Bitbond is a regulated financial institution. This makes it the first blockchain company with a license from the German financial regulator BaFin. Innovative data sources like e-commerce sales and bank account transactions fuel Bitbond's machine learning-enabled credit scoring technology. The platform is live since 2013 and has over 150,000 users. With your help, Bitbond aims to become the world's leading business lender. Are you ready to get ahead of the game? Do you want to profit from Bitbond's revolutionary lending platform? Join the official crowd sale and secure yourself one of the world's most innovative tokens. Bitbond.
Right, so we launched this STO subscription on the 11th of March. It runs until the 8th of July. We've already raised $2 million from 1,000 different investors. This is very much a retail product with a base coupon of 4% and a profit share of 60% coming from the issuing vehicle. German press has been incredibly positive, which is unusual for the German press, I have to say. It's a bit more detailed. So I think just in conclusion, I'd just like to say that people have been asking some reasons why you should invest in the token if you can. Why would we come to Serbia? There's a lot of questions about whether we can use our blockchain technology for the lending aspects of implementing that here in Serbia. But we believe in expanding and new market opportunities. From a conversation that our founder had with the head of a company called Jamia in Kenya, in the end, we were able to break into the sub-Saharan African market. We're one of the largest lenders there. A lot of people talk about financial inclusion. We actually do it. And from these conversations, opportunities come. And that's one of the reasons why we wanted to be here. We wanted to talk with you guys today. And I hope I was able to pass on some information about what we're doing. And I'm very happy to answer any questions you might have. Thanks very much.